Accounting equation after transactions. A business commenced with capital in cash of $3,000. Inventory costing $2,400 plus sales tax is purchased on credit, and half is sold for $3,000 plus sales tax, the customer paying in cash at once. The sales tax rate is 10%. What would the accounting equation after these transactions show? Answer. Assets. Opening cash $3,000. Cash received $3,000 plus $300 sales tax for $3,300. Closing cash $6,300. Inventory $2,400 minus $1,200 is $1,200. Total assets $7,500. Liabilities. Opening liabilities. Sales tax payable $300 minus $240 is $60. Trade payable $2,400 plus $240 sales tax, $2,640. Closing liabilities $2,700. Capital. Opening capital $3,000. Profit on sale of inventory $3,000 minus $1,200 is $1,800. Closing capital $4,800.